In today's episode, I'll talk about two interesting stories. In the first story, I'll talk about hydrogen fuel, which is a fuel that promises to change the way we think about energy today. And in the second story, I'll talk about how Adani is once again back in the news, and this time regarding petrochemicals. Welcome to the Daily Brief Show by Zerodha, where our aim is to cut through the noise and simplify the biggest news and stories in the financial markets in a way that is easy for you to understand, yet one level deeper as compared to your traditional news channels. I'm your host Anurag Bansal, and today is Wednesday, the 8th of January. In the first story, like I said, let's talk about a fuel that is kind of promising to change the way we think about energy in the first place. Now, imagine a source of power that, when used, does not really release any harmful gases which contribute to pollution and climate change, but instead actually produces clean, drinkable water. Now, that, ladies and gentlemen, is the big promise of hydrogen energy, which I'm sure as a buzzword you have probably heard in some conversations here and there. But the question today is, what exactly is hydrogen energy and why are we exactly talking about it? To understand all of this better, let's break it down a little bit. See, hydrogen energy basically refers to hydrogen gas as a source of fuel. It's as simple as that. Now, some of you might remember from your school days that hydrogen is the most abundant or most available element in the universe. It is basically everywhere in space. But the thing is, on Earth, it is not quite available in a ready-to-use form like coal, oil, or natural gas. Basically speaking, we simply cannot extract it from the ground. Instead of that, we need to produce it first, which is very similar to how we generate electricity before using it. Now, producing hydrogen requires a primary energy source. To give you an example, just like how electricity can be generated from coal, wind, or solar power, hydrogen also needs an energy source to be created. And here is where things get interesting. See, the method that is used to produce this hydrogen is the factor that decides its color. Hydrogen gas itself does not come in colors of its own, but scientists and energy experts use a color-coded system to classify it based on the production process. There is grey, green, blue, brown, black, pink, and even purple hydrogen for that matter. Now, the most talked about hydrogen here is green hydrogen. Now, this is considered the cleanest option because it is produced by splitting water into hydrogen and oxygen by using renewable energy sources like wind or solar power. Now, this process, for your reference, is called electrolysis, and it does not create any harmful emissions. All it takes is clean energy and water, which makes hydrogen an environmentally friendly option as a fuel. Now, I'm sure at this point you're wondering, if green hydrogen is so clean and promising, why hasn't it really taken over yet? And that is exactly where this entire situation gets a little more complicated. See, to begin with, let's understand, why do we even need hydrogen in the first place? See, the world, of course, as we all know, is struggling with climate change, and it is very, very clear at this point that we need to move away from fossil fuels, which, by the way, for your reference, still account for about 80% of global energy use. Now, at a first look, I'm sure switching to a renewable source of energy like solar or wind seems like a pretty simple solution. Electric vehicles, for instance, run directly on batteries that can be charged with renewable energy, for example. So why even go through that extra step of creating hydrogen, because it'll only be used as a fuel later, right? Because after all, the process of cleaning and using hydrogen is far less energy efficient as compared to direct electrification. Let me use EVs or electric vehicles as an example to explain this a little better to you. Now see, when you charge an EV, some energy is lost during transportation and storage, but the overall efficiency is still around 80%. Now if you compare this with a hydrogen-powered vehicle, first, renewable energy is used to split water into hydrogen, which involves energy losses of about 30 to 40%. Then when the hydrogen is converted back into electricity in the vehicle's fuel cell, another about 40% of the energy is lost. Now this means that hydrogen vehicles end up being far less efficient than battery-powered vehicles. So then the real question is, if it is so inefficient, why do we even need it in the first place? See, the answer is in certain industries and sectors where batteries and electrification just do not work well enough. Now, these are often referred to as hard-to-abate sectors. You can think of industries like steel making and cement production, which typically require extremely high temperatures, which is something that electricity alone cannot efficiently provide today. Or even consider heavy-duty transportation like ships, airplanes, or long-haul trucks. Now, these vehicles need an enormous amount of energy, and current battery technology is not practical at all because it would require batteries that are very, very heavy or are extremely, extremely expensive. So in these cases, hydrogen becomes a great alternative because it can provide that high energy density and versatility that is needed to power these challenging sectors. And that particular thing, ladies and gentlemen, makes it a very essential part of the global shift towards cleaner energy. So now with all that context in place, it is important to understand where we are today in the hydrogen story. See, according to recent reports, the world produced about 97 million tons of hydrogen in the year 2023. Now, most of this hydrogen was made using fossil fuels like natural gas and coal, which usually release significant amounts of carbon dioxide in the process. Only a very tiny fraction, which is by the way less than 1 million tons, was considered low emission hydrogen, and even that relied on carbon capture technology. Now, for your reference again, this technology is aimed at trapping and storing carbon dioxide, which is produced during hydrogen production, instead of letting it escape into the atmosphere. Now, on the other hand, meanwhile, hydrogen produced through electrolysis, like green hydrogen as we spoke about earlier, accounts for less than 100,000 tons in 2023, and it was mostly concentrated in China. So in short, you could think about it this way. While the idea of green hydrogen is very, very promising, we are still really far away from seeing it play a major role in our energy mix. In order to meet future energy goals, the world will need to produce around 500 million tons of hydrogen by the year 2050. And that is a big, big jump from where we are today. Now let's move a little forward in the story and let's talk about India and our big ambitions in the hydrogen space. See, in January 2023, India launched the National Green Hydrogen Mission. Now the plan here was to produce 5 million tons of renewable hydrogen by the year 2030 and position India as a leading global manufacturer of electrolyzers, which is by the way the machine that is used for electrolysis. Now Indian companies are also making some interesting moves over here. Reliance Industries, for example, has committed to becoming net carbon zero by the year 2035, and they have plans to invest around 750 billion rupees in renewable energy projects, which includes green hydrogen. Now, very similarly, Indian Oil is setting up our country's first green hydrogen unit in its Mathura refinery, and the Adani Group is working on India's largest hydrogen blending project. But the thing is, despite all of these efforts, there are some very, very big challenges that we will need to overcome. See, producing green hydrogen requires large amounts of renewable electricity, and that makes it very expensive as compared to hydrogen made from fossil fuels. Infrastructure is also one more big hurdle over here. See, hydrogen needs special pipelines, pressurized tanks, and storage facilities, which by the way are still very underdeveloped and are very costly to build in the future as well. And there is also the issue of efficiency, like I spoke about earlier. Every time we convert energy from one form to another, we lose a bit of it. And the same, like I said earlier, again, is true for hydrogen too. So to sum up everything together, hydrogen energy is definitely full of promise, but it still does not solve all of our energy problems. It does have a crucial role to play in industries like transport sectors where electrification is not so practical, but making it a reality at huge scale will require us overcoming many technological, financial, and logistical challenges. Let's now move on to the second story and talk about how Adani is now making some news in the petrochemical sector once again. This time around, the Adani Group has announced a joint venture with Thailand's Indorama Resources in order to set up large petrochemical plants in India under a new entity called Valor Petrochemicals Limited. Now, for a company like Adani that has seen a fair share of ups and downs in the petrochemical space, this particular move feels a bit like a comeback. But the question is, what's really going on over here and why does it matter for someone like you or me? Let me very quickly break it down. See, back in 2021, Adani had big plans to build a massive 34,900 crore rupee coal to PVC plant in Mundra, Gujarat. Now, for your reference, PVC or polyvinyl chloride is a material that is very popularly used in construction, packaging, and many other industries in India. Now, our country, India, imports nearly 60% of our PVC. So, Adani's idea over here was very simple. They wanted to cut down on imports by producing 2 million tons of PVC every single year. But the problem is things did not quite go as they had planned. In 2023, after the Hindenburg report came out and they accused Adani Group's finances, all of Adani's plans came to a halt. Adani Group even tried securing 15,000 crore rupees in funding from SBI, but that didn't work out for them either. So this project was put on a complete pause. But now, with Indorama's expertise and partnership, Adani seems to pretty much be ready to revive all of these ambitions. But before we move on and understand what is exactly happening here, let's very quickly take a break and understand what exactly are petrochemicals and why are they such a big deal over here. And let me start with the very basics for those of you who are new to the markets and new to this particular space. See, petrochemicals are chemical products which are made from hydrocarbons, which is a compound that is found in crude oil and natural gas. Now, you can think of them as building blocks of countless things that we use daily: plastics, clothing, packaging, medicines, electronics, detergent, construction materials, you name it, and petrochemicals probably are involved in it. And I'll tell you how it works as well. See, when crude oil is processed in a refinery, the main goal is to produce fuels like petrol, diesel, and aviation fuel. But refining also produces some byproducts like naphtha, ethane, and propane. Now, these byproducts also do not go to waste. They are actually used as the raw material to create petrochemicals like ethylene, propylene, and benzene. Now, these in turn, therefore, are used in order to make plastics, synthetic rubber, and many other essential materials. Globally speaking, petrochemicals is a very lucrative business. While refining crude oil into fuel is relatively like a low margin game, converting raw materials into petrochemicals usually has much higher returns. And that is why many companies are now increasingly focusing on petrochemicals as a product. In fact, a report by McKinsey says that about 80% of new investments in refining capacity globally are being directed towards petrochemicals rather than fuel production today. You might ask me why? See, that is because unlike fuels which face declining demand as electric vehicles and renewable energies are gaining traction, petrochemicals are pretty much indispensable. Right from the plastic casing of your phone to the components in wind turbines, they are everywhere and they are practically irreplaceable. And right here in India, we are also pretty much poised for a petrochemical boom. On an average, we Indians consume just 10 kgs of petrochemicals per person per year. If you want to compare this to the global average, it is 30 kgs per person per year. And that is when you can see the enormous potential for growth. There are rising incomes, urbanization, and expanding industries like packaging, textiles, construction, and automotive, which are all driving this demand. So while recognizing this, the Indian government has now set a target to double the country's petrochemical production capacity to about 46 million tons per year by the year 2030. Now, the goal is not just to meet domestic demand, but it is also to cut down on imports, which cost the country about 87 billion US dollars every single year. Now, Reliance Industries, which is India's biggest player in this space, has already kind of mastered the petrochemical game. Their Jamnagar facility is not just the world's largest refinery, it is also, in a manner of speaking, a fully integrated petrochemical complex that is capable of producing 30 million tons every year. Indian Oil Corporation as well has been ramping up its petrochemical operations, and they're focusing on converting more crude oil into high-value petrochemicals rather than low-margin fuels. Now, this integration of refineries and petrochemical plants is both cost-effective and efficient. But still, India faces some severe challenges here. See, a large part of our petrochemical production, around 80% of it, comes from refinery integrated facilities. Now, while this keeps costs low for sure, it also means that India has to heavily rely on imports for high-value specialty chemicals. In addition to this, competition from global players, especially China and the Middle East, is very difficult right now. The Middle East has an advantage due to its abundant natural gas, while China is dominant as both a producer and a consumer over here. Now, recently, China's economic slowdown has also led to surplus petrochemical capacity, which has resulted in cheaper exports that often flood the Indian market and put pressure on local manufacturers. Sustainability is also a very important challenge here. See, the global push for a circular economy, which is basically where materials are reused and waste is minimized, is forcing companies to entirely rethink their processes. Now, for India, this is of course both a challenge and an opportunity in order to leap ahead in sustainable petrochemical production. So now, after all of this deviation, let's come back to the story and understand where exactly Adani's new venture fits into all of this. See, by partnering with Indorama, Adani is basically diversifying its portfolio and tapping into this high growth industry. Now, this collaboration is basically a larger trend among Indian companies. Because fuel demand is stabilizing, companies like Reliance, Indian Oil, and now even Adani are now focusing more on these higher margin petrochemicals to future-proof their entire business. In a way, Adani's entry into this space signals its intent to compete with all of these big players. And in the process, they also end up helping India's growing demand while also reducing our reliance on external imports. With that, let's move on to the final section of the day and talk about the quick news tidbits. First, vegetarian thali prices rose about 6% year over year to 31.6 rupees in December, while non-vegetarian thalis jumped about 12% to 63.3 rupees. All of this was driven by higher potato, tomato, and chicken costs. Month on month, veg thali prices dropped 3%, but non-veg thalis climbed 3%, reflecting persistent food inflation pressures. Second, the second phase of the PLI scheme for specialty steel with a 6,322 crore rupee budget is aimed at cutting imports and boosting self-reliance. Now, with investment thresholds lowered, this scheme targets expanded downstream capacity and global leadership. Third and the final one for the day, Novco Vistas acquired Vadraj Cement, adding 6 MTPA to its capacity, increasing it to 31 MTPA. Now, with phased refurbishments planned, this deal is going to strengthen Novco's position as India's fifth largest cement manufacturer. That's all the news and stories I have for you today. I hope you found value in today's episode and maybe learned something new from it today. As usual, I will see you in the next episode. This is your host Anurag Bansal signing off. Take care and goodbye. Disclaimer, this content is for informational purposes only. None of the stocks, brands, or products mentioned are recommendations or endorsements.